Hey everyone, this is Matt Grossman from Barchart. And today I'm lucky enough to be joined by Ed Eglinski from Direxion ETFs. How you doing, Ed?
How are you today? Good to be here.
Good. I'm glad that you're here. Why don't we start out with this? Will you tell us a little bit about yourself and Direxion?
Sure. As you can tell by the hair, I've been in the financial industry over 30 years. I don't want to date myself. I've been with Direxion for 13 years. I head up our alternative investments and global sales for the organization. Direxion has been in existence for 25 plus years, is a top 20 US based ETF provider in terms of AUM. We're about 45 billion in assets, and primarily our firm has leverage and inverse ETFs. So we're primarily an ETF provider, but unlike most ETF shops, we have tactical trading tools, whether they're bull or bear, with different leverage points ranging from an inverse 1x bear to 3x bull and bear on the daily returns of broad indices. And as we'll talk about also, individual stocks in some cases.
And one of the things that I know about Direxion is that a lot of your ETFs are targeted for active investors.
That's correct. These are designed for short-term active trading. The word daily is even in the name of these leverage and inverse ETFs. We'll get into that, what that represents in a minute. But they should be monitored on a daily basis. So if somebody is not going to be focused on trading from a day-to-day standpoint, these are probably not the appropriate vehicles for them. These are not buy and hold vehicles or set and forget vehicles. These are for short-term active trading.
Great. Thanks for that information, Ed. So the next topic I'd love to talk about is inflation. Inflation is on top of everyone's mind. It has been for a while. The Fed, you could say, has been pretty successful about bringing inflation down, but we're not as close as I think everybody wanted to the 2% target. That is its mandate. Where do you see inflation headed in 2025? And what are some of the tools, the products that traders can use to profit off the volatility concerning inflation?
Well, certainly, if you ask this administration, maybe all you have to do is go to the grocery store and look at a price of a carton of eggs to determine that. But, with all kidding aside, there is some truth in jest. When you look at inflation, it continues to remain persistent. And if it continues, especially with the staples, with food and energy being elevated, it's going to have an impact on consumers. And then you have to worry about whether there's going to be a recession. And that's definitely growing a little bit, that camp. The possibility of what's called stagflation. I'm not going to bore your viewers, but basically that's no or low growth environment with high prices. And, we got half of that equation right now. When you look at the elements of what could trigger inflation to continue or possibly even increase, you certainly have a couple of the ingredients for that: geopolitical risks, the tariffs, as you've mentioned before. And then the last thing, really, immigration crackdown and the impact it could have on labor costs, and especially higher labor costs potentially. So when you're looking at where can I go to trade from a short-term perspective that might be able to take advantage of this, certainly commodities is a place. Specifically gold. We've had a lot of interest in gold over the years, gold bugs, and even on gold mining stocks. There is a difference there. Gold mining stocks are a derivative of the physical commodity gold, but they do behave differently. For example, this year, gold mining stocks are up almost double what the physical commodity is up itself. But when you look at gold, there's a number of reasons why the physical commodity and potentially the beneficiary of it, gold mining stocks, why it may continue to rise, and it's right near record highs now, is the geopolitical risk, policy uncertainty, and look where the U.S. stock market is. It's at all-time highs. And if you get rates starting to drop, the flight to safety, the preferred flight to safety could be gold, and maybe the derivative of that, gold mining stocks. So we have a number of ways you could trade the gold mining stocks itself. Some of you might be familiar with GDX and GDXJ. That's the gold miners and junior gold miners non-leveraged ETFs. They have plenty of volatility with the non-leveraged. We have 2x bull and bear if you want to trade short-term on the gold mining stocks. We have Nugget and Dust. And then for the junior gold miners, JNUG rather, and J Dust.
So that's for gold. What are some other commodities or sectors that traders and investors could look at to play this volatility when it concerns inflation and how it's going to move everything in the market?
Yeah, we certainly have ways to trade energy stocks. With this administration, there could be less reliance on alternative energy, more focus on fossil fuel. Certainly sanctions might pick up in certain oil producing countries that could have an impact one way or the other on oil stocks. So we have a 2x bull and bear on the Energy Select Sector Index that includes the likes of Exxon and Chevron. That's ERX, ERY. And then if you want to look at more granularly in the energy space, the oil and gas and production stocks, we have Gush and Drip, two of my favorite symbols. Those are all 2x bull and bear products. And one of the things that's coming up again lately is nuclear energy and the focus on uranium. So if people wanted to trade a basket of stocks, including physical uranium, we have a 2x daily bull URAA to participate there. Now I'm going to shift gears a little bit for those that are on the call today and viewing this. Some people may not be traders. So for those that are asset allocators and want more diversification as part of an overall portfolio, we have our COM ETF, which is a broad basket of commodities. It's made up of 12 commodities, and it's a rules-based index. What's important is it's not always 100% static long. Based on price trends, it'll be long a commodity, or in cash with the commodity if it's showing a downward price trend. COM has been around approaching 8 years. It's been a 4 or 5 star rated Morningstar fund within the commodity category. And right now we're long 8 of the 12 commodities that are within the index itself. So COM might be something for your viewers that are more asset allocators, want to diversify, want something that doesn't correlate highly to stocks and bonds. Certainly in this environment with equities at highs in terms of the S&P and the NASDAQ 100, a way to further diversify a portfolio beyond that.
It's great. It's a lot of tools. I mean, I can tell you, I think commodities are going to be something that every active trader should be watching this year. It's just one of those years with inflation, with tariffs, what's going on with geopolitical risks, as you say. It's going to be a lot of volatility in the commodity space. So a lot of different really cool tools that traders can use from Direxion. Well, Ed, thank you so much for your time. It's been a really insightful conversation, and we really appreciate it and hope that we can talk again soon.
Sounds good. Take care.